and broker downgrades as well there. What's your thoughts on Cochlear? What are we going to see today?
We have a look at Cochlear. We have seen this downgrade. $130 to $135 million is what they're expecting. So that's a downgrade of between 15 to 19% on our numbers. Now, they have come out to say that second half sales have been weaker and they are seeing slower market share in the US. There has been a little bit of brighter news coming through for the company, though, and that's around an update around Nucleus 6. Now, it looks like they're not looking at relaunching Nucleus 5, instead looking at a successor, Nucleus 6. And if we have a look at Nucleus 5, this was launched in September 2009. I guess we've seen the recall of Nucleus 5 now 16 months ago. And what we have seen is lower upgrade revenue coming through. So if we do see Nucleus 6 coming out to market, that's going to stem some of the loss in the upgrade revenue that we've been seeing. We have a look at Nucleus 6. It is the only auditory scene analyzer, which means it actually applies the best sound processing to background noise at the time. It's also the smallest and the most waterproof behind the ear sound processor as well. But altogether, I think the market's really going to be focusing in on this downgrade today. So we are expecting to see a pretty big loss for Cochlear shares today.
Thanks, Julia. All the big four now having gone down the share buyback route. How's, I suppose, NAB's offering going to be treated today?
This is overall a positive for bank shareholders, because sometimes when we do see these dividend reinvestment plans come out, the companies issue the shares without buying back the shares on market, so it ends up being dilutive, issuing new shares to the market, and it's almost like a bit of a mini capital raising, and we saw this quite frequently throughout the global financial crisis. The good news is that the banks aren't doing that, and the NAB saying it's looking to neutralise the impacts of its dividend reinvestment plan via a $300 million share buyback. So it is looking at buying back its shares to be able to do this dividend reinvestment plan. So that's a positive for NAB shareholders. Unfortunately, we have seen heavy selling of that dividend yield space. Last week, the worst performers on the market were the high-yielding sectors. So it does look like we may still see some selling in the banks today. But overall, I think the news coming through from NAB, a positive one for its shareholders.
Graincorp, but sounding like this takeover bid's getting very political. Warren Truss suggesting the Nationals very concerned by the takeover. What's your thinking on what's going to happen to this now?
Well, we always knew that this takeover by Archer Daniel Midlands, that there was going to be some concern around the Foreign Investment Review Board, and that's really because of the position that Graincorp has in terms of the export wheat market here in Australia. So watching those national concerns very closely to see whether this deal is going to get over the line. Of course, if we have a look at Graincorp's underlying business, we've seen back-to-back years of records in terms of crops, and now we're seeing a little bit of a pullback. So its business is undergoing a bit of a soft patch compared to previous record years. So I guess shareholders really do want this takeover to get over the line, and of course, if we don't see this takeover being approved by the Foreign Investment Review Board, we will see a sharp downturn in terms of the share price and that takeover premium, leaving Graincorp shares
down under 80 cents, down about 12% so far. Early days yet, but yeah, not great news at all coming from Transpacific there.
A pretty big downgrade coming through. They're predicting full-year profit now is going to be between $46 to $53 million. So that's a cut of between 30 to 40% in the forecasts that were in the market already. So a big downgrade coming through from Transpacific Industries, TPI, today. We have a look at the actual business of TPI now. The company deals in waste management, industrial cleaning, and really the difficulty comes because we have seen troubles in the manufacturing as well as the construction sectors of the economy. In fact, just this morning we've seen some manufacturing numbers coming through in Australia. We've seen a read of 43.8 in the month of May, and while that's a rise of 7.1 points from the previous month, it is the 23rd consecutive month of contractions in this space. So that's really having a big impact on a waste management industrial cleaning company like TPI. And of course, since the GFC, there's been a number of troubles for this company on an operational basis, on a management basis, and also having debt troubles. So we've seen massive recapitalizations for this company, equity raisings as well, and it now looks like it's facing a tough environment. So a lot of shareholders would have been hoping that TPI was past the worst, given what we've seen during the GFC for this company, but unfortunately a profit downgrade coming through, and it looks like the tough conditions in manufacturing and construction really weighing on this business.
On the outlook for the day, I mean, we've got two sectors just hanging in positive territory, but the falls in Telstra obviously pushing that telecoms sector sector down worst performing, followed by the materials there. Financials just sort of holding up in positive territory. What's your sort of outlook then for where we're going to see the index go today?
Well, last week we saw the market losing 1.2%, and that represented the third consecutive week of losses for the Aussie market. And the real area of damage were the high yielding areas. They were the ones that were heavily sold off. So that's the area that we're going to be watching coming into a new month and coming into the end of financial year. Unfortunately, it was a bad end to May for the US stock markets, where we did see a fall of 1.4%. We did see those PMI numbers coming out of China, and they came in at 50.8, so that's a better reading than the previous month of 50.6, but it does look like it's had a limited impact in terms of the material space. But a lot of economic numbers coming out this week. Today we'll be watching retail sales. Now the expectation is that we will see a rise of 0.3%, and that's after a fall of 0.4% in the previous month. Then of course tomorrow we see the RBA interest rate decision, and then on Wednesday we'll also see GDP numbers coming out of Australia. So altogether, it's going to be a pretty big week. It looks like we are off to a softer start from that lead in from the US, where it was a pretty ugly session, especially in the second half of the session on Friday. But altogether, we'll be watching those economic numbers to hopefully give us a little bit of a boost.